Hello, everyone. I'm Raoul Pal, the CEO and co-founder of Real Vision. I hope the feed's okay here. We're in the Cayman Islands, so it's sometimes a little bit slow, but I'll do my best. What I'd like to do is talk about the retirement crisis that we have started featuring on Real Vision about. It's a really, really important issue for us all, and probably the most important issue in all financial markets. Most people don't really realize it because the pension is the sort of thing that you keep in your background, and you assume that your pension fund manager or your investment advisor is going to do the best work for you to make sure that they are looking after your fiduciary duties to reach your retirement dreams. But my concerns for some time are that those retirement dreams are unobtainable and that people aren't treating your money as they should do, and that you are taking too much risk that you don't really understand. I did a video about a year and a half ago, which was the coming retirement crisis. 2 million people watched it on YouTube, and it was a viral hit. And it really struck a chord and made me realize how little people actually knew about the issues that they've got with their pensions. What they kind of know is there's a growing sense of unease that the amount you've saved is not going to be enough to retire on. Or if you're much younger, then the opportunity set that you have is probably not going to realize your future dreams either. You see, for somebody who's young, you've got the issue that equities are at all-time high valuations. The bond market's at all-time low yields. Property prices are at all-time highs. So there is almost no asset. Credits too is at all-time record highs in valuation. So you almost have nowhere where you can have a future expected return that's positive. When things are valued this high, valuations tend to be mean reverting over the longer cycle, and therefore the chances of maybe a 10-year period of negative returns at this point are relatively high. But even worse is what happens if you're about to retire soon. If you're in that baby boomer bracket, let's say you're aged between 60 and 75, that's where my real concerns lie for now. So having seen the kind of levels of interest that we had with the original piece that I did, I decided to get the editorial team to put together for Real Vision, in typical Real Vision fashion, that kind of unbiased deep dive analysis of what's really going on and dig into all of the issues involved. I kicked off the week with a video I made free that many of you have seen, which was the retirement crisis part 2. And that's where I laid out the next steps, what I think is going on here, and how concerned I am about the system that we built around your retirement savings, and how I don't think you're going to be served by the asset allocations that you have and the expectations that you have. And I think the pensions industry is creating a problem. So what kind of problem am I talking about? Well, you've kind of read everywhere that states like California or New Jersey have massive black holes, and Illinois is another one, have massive black holes in their pension funding. What that means is they have defined benefit contribution systems, which means that they'll give you a percentage of your final year's salary, in theory, when you retire. So if you're a firefighter in Illinois, you're hoping to get 60% of your final year's salary, and on a retirement age of, let's say, 65. But the problem is they don't have enough money to actually honor those promises. And people don't realize it. So the first trick they pull is pushing out the retirement age. Oh, we're going to move it to 67, we'll move it to 70, making it ever more difficult to retire. But then when it comes to it, they're not going to meet the obligations. And we've seen it all over the place, particularly also in the private sector, the corporate pension plans, where they're starting to say, well, sorry, we didn't kind of mean what we said. The promises we made, we're going to have to break, and you're going to get less money. So that's not fair. You've saved hard-earned money into the pension system, and you're not getting what you're supposed to be getting because they've made too many promises. One of the facts is people are living longer than they ever expected them to. Also, bond yields are much lower than any of the models had. So how it really works is when you go into retirement, your asset pool basically goes into an annuity, which is essentially the bond yield, and then they calculate the number of years they think you're going to retire. Both of those are screwy, so in which case there's not enough money for you. So I'm really worried about that. I'm also really worried about how you guys are dealing with your 401ks and how your pension fund managers are dealing with your pensions still. So if you think about the pension system, they too know that they haven't got enough money to pay your obligations, the promises of your retirement dreams. So what they've done is they've taken more and more risk in your later years, when your risks should be reducing. The standard asset allocation model should be that you reduce risk the older you get, because you can't lose your pile of capital when you retire, because you don't have a job when you retire, so you can't buy the dip. So it's okay for me in my early 50s or somebody in the 30s or 40s, because you can buy the dip if you get a big sell-off. But they're taking a lot of risk, assuming that there will be no sell-off, because there's no other choice for them to try and meet that funding gap. So what does that mean in reality? It means that they've got record high allocations to equities, record high allocations to credit. Now remember, these are all-time high valuations. They've been piling money into this, particularly into index funds as well, just to lower the cost by a small fraction, hoping to eke out some extra returns. So that's a really big problem that they're taking. Why there's a problem here is because the next recession is going to come. I think we're going into it now. I think the coronavirus and the trade wars were the tipping point, and the Federal Reserve raising rates beforehand were one of the key factors that caused it. So why does recession worry me? It's because almost every time we've had a recession, the stock market halves. And again, if you're 30 years old and the stock market halves, great, because you can buy more at lower levels if you think it's going to continue going up over time. But the problem is if you retire and the average baby boomer is 65 years old, well, there's a different mindset that takes place. You're going to try and protect your retirement savings if you see the market sell off. So we get something called negative convexity. It's a higher propensity for people to sell in a down market as opposed to buy, because there's no dip buyers, because the people with all the money are the baby boomers, and they have to sell to realize their final pool of assets. And if they can see it shrinking because the equity market's falling, they're going to desperately be trying to sell to get and realize anything that they've got and then try and put it into bonds. The problem is, in a market like that, bond yields are probably zero. So you've got this awful dynamic where people are going to sell in record numbers. They're going to sell, and they're corralled into fewer and fewer index names. People like Apple, Amazon, Google, companies and Microsoft, companies like that, they're corralled into a very small number of names, all within index funds, and they're going to need to get out all at the same time. So that could create some really problematic markets and could really, really hurt everybody's retirement savings. That's what I'm terrified about. Also, I've talked before on Real Vision about the issue with the credit markets, how there's kind of 4 trillion of corporate credit in America. Oh, sorry, there's more than 4 trillion in America, but that's in the 3 trillion is in the triple B market, which could get downgraded. And if it gets downgraded, they get panicked out of the pension system because they're not allowed to hold junk bonds. So you have an issue where you could see rapid selling of corporate bonds and equities in the next recession. And that's something that makes me extremely concerned, because we could see really rapid losses to your retirement savings. So that is my big concern here. And that's why I wanted to do this series on Real Vision. I wanted to get people to understand really what's going on, because your pensions advisor or your investment advisor doesn't really tell you what they're doing. They say, yes, we've got the right allocation for you. We've got some growth. And the equity market went up a lot last year, so aren't we great? The problem is they're taking risk at the peak of the cycle. The bond market and the economic indicators are already suggesting a recession is close, but the equity market is kind of in la-la land right now, and so is the corporate bond market, and that really concerns me. So on Real Vision, we decided to bring you the world's best experts on all of the issues that you're facing. So the first week of our programming is all about the issues that you face. And you need to understand that this is your money. Nobody's going to save your ass here except yourself. And so if I look at what we've got many of the big pension fund managers who are talking openly about the problems within the system. We've got people talking about indexation. We've got people talking about illiquidity. We've got people talking about business cycle risk, all to set you up with this understanding of how complicated this world is and how it's teetering on a very edge of losing your money into retirement. But it's also, we look at the angle from the younger people and that opportunity set that is so bad right now, where there is no point investing in some of these assets and they need to look elsewhere. Because if not, they're just basically throwing good money after bad. So that's the second part of the series. And this is really important. The bit that you guys, if you haven't subscribed, it's only $1 to get 3 months access to Real Vision, because you need to see this second part. You might know, yeah, I know there's problems with the pension, but in the second part, we offer the solutions. And that's really crucial here. We look at, okay, annuities. You're probably going to have an annuity. So what's the best way of doing it? How can you stop being fleeced by Wall Street in paying the high fees and complex products that you don't really need? So we've got Ramsey Smith, an ex-Goldman Sachs friend of mine, to talk about that. We also look at something really interesting, which is tontines, which is the old way of dealing with annuities, which was known as a dead pool, which is not a very attractive name. But what it essentially means is you all put the money into a pot, and as people die, then that money stays within the pot. So it allows everybody to have money through their retirement years. So that means that you're essentially protected against any of the longevity of life issues that were currently outstanding. And there is a really obvious opportunity for tontines to change people's worlds. And I think this is going to be a big movement and something you should really understand because it's moving fast. I also think that if we're faced with bad demographics in the West with high debts, then we should be looking at economies that have the opposite. I call these the monsoon economies because most of these are all formed around India in the Indian Ocean. India at the center is the big one. It's got 1.3 billion people and the average age of the population is sub 30. It's young and huge and dynamic. Now, India is not a panacea. There will be ups and downs of the business cycle. But basically a buy and hold strategy in India over a 20-year time horizon or 30-year time horizon is likely to look like the buy and hold time horizon you got from 1980 in the US to current day, an enormous opportunity to generate wealth. And there are many other countries around the Middle East that have these similar demographics and similar opportunities. It could be Indonesia, it could be Malaysia in the south, it could be even countries like Iran in the north, it could be Turkey. Some of these are problematic now, but that gives us the opportunity to buy in later. Iran, for those of you who are allowed to invest in Iran, is one of the cheapest stock markets in the world. So a tiny allocation could create huge growth in the future as Iran comes back into the global economy, which I think it will. Maybe you don't want to take that risk, but there are many other countries of this sort that offer enormous opportunities. And even from developing businesses alone, creating your own business is another key theme. If you're young, use yourself as your best investment. That's probably the highest return now because extraordinary amounts of capital are going into venture capital. And that venture capital allows you to start a business and run a business, much like I did with Real Vision. And that is a high return on capital if you get it right. Yes, you can fail too, and failure is all part of the journey. But the probability of getting it right over time, even with a few failures, is very high. So that's a great thing. And you don't have to create the new Microsoft or the new Facebook. You can do it with a small business too. The great returns of getting a small artisan business are great, and that will change your future retirement planning and your life forever. Talking of changing lives, I think the movement towards digital currencies, Bitcoin, cryptocurrencies, are essentially a rush towards creating a new architecture for the world's financial system and many more things, the trusted ownership of everything, the secure transfer of all assets, being it digital or physical. It is an extraordinary revolution. And many people are so behind in the narrative because they still don't understand what Bitcoin is. Now, you don't need to understand every manifestation of what Bitcoin could be or is, or what Ethereum is, and some of the other things, what tokenization means, you need to start understanding that the risk reward in this kind of thing is enormous. You don't get an entire financial system where I'm seeing the smartest people in the world coming out of finance and technology all going into this one space, creating this new future dream. You've got a chance of investing in that, and the chance of making 100x are high. And I know Bitcoin has gone up a lot, but it's going to go up a lot further in my view. And maybe it's not Bitcoin. Maybe Ethereum is the next one. Maybe tokens. Maybe tokens in the Brave browser. There's so many opportunities within this space, and it's only going to get more. Investing in startups in this space, in venture capital in this space, I think is going to pay enormous rewards. And we've seen some of the smartest people in Silicon Valley moving their focus towards the new world of crypto and digital. People like Andreessen Horowitz. And these guys really do understand it and get ahead of the trend. Also, all of my kind of mentors and friends within the global macro investing world are all saying the macro opportunity set combined is probably less than the opportunity set in the digital space. And they're all moving there. And the technologists are saying, well, I'd rather start in this space than I would, let's say, in the Web 2.0 space, the world that's pretty saturated right now. So I think those kind of opportunities, those blue sky opportunities do exist if you're younger. If you're older, you need to know about expectation management, saying, okay, I'm going to revise down my expectations. I'm going to take less risk. I'm going to force my pension fund to take less risk, change my allocation, tell my investment advisor, I don't want to lose my pension in the next recession. I want to protect it. And then think about, what can I do to change my outcomes? For example, if you live in Europe, you can move to Southern Europe. Spain has a great healthcare system. The longevity of life is second only to Japan. It's going to increase versus Japan. You have 300 days of sunshine, so you have a very healthy, rewarding, high lifestyle environment, and it's cheap as hell. And that's true of Greece, it's true of Southern Italy, it's true of Southern France. So there are many places, and Portugal as well, there's many places that you can move to that can change your dynamic. You need less money and you get the quality of life balance raised up dramatically, which is really the important one, particularly as you're going into retirement. And that is true also in southern states in the US, places like Arizona. They're significantly cheaper. Or you can cross the border. There's places like Mexico, Costa Rica that are significantly cheaper in lifestyle and have quality medical operations too, to allow you to live that comfortable, wealthy lifestyle that you deserve from all the hard work you put in. Also, one of the other trends that we talk about in this series is about moving in and having multi-generational households, something that stopped with the baby boomer generation that didn't want anything to do with their parents. And that's true of my generation of Gen X. It's abhorrent for us to go and live with our parents. But the millennial generation and the baby boom generation actually are very close because they're similar minded in many ways. And so for the opportunity for people to live in multi-generational households changes the equation dramatically, because then you can utilize one property, which may be the parents' property, which may be bigger. So then that takes rid of all of the property costs. So that releases free cash flow and income. Maybe one of the grandparents can still part-time work. Well, that increases more money. Also, with having grandparents in the house, you can look after kids. So that frees up the ability to work and increases quality of life. And the quality of life of sharing burdens and sharing life together offsets the fact of, sometimes it's not quite what you want out of life, but the opportunity of doing that basically halves your costs and maybe increases your income by 50%. So these are some of the things we bring in experts on Real Vision to talk about. And I really urge you to go and spend that $1 to go and have a look. It's just $1. It's ridiculous, because it's our mission to make sure you understand these things. Our mission is to democratize the world's best financial information and intelligence, so you don't have the same issues that we saw in 2000, 2008. That'll be unforgivable. You see, for me, being at the epicenter of the financial system, knowing that most people didn't know anything about it is just plain wrong. And I think people now need to be empowered, and that's what Real Vision is all about, is empowering you to understand not only your own situation, but the global situation of the complicated world of finance, business, and the global economy. Understand those things in an unbiased way from the world's best experts, and you really are in better control of your future, of your business, and of your finances and your family's finances. So I think that's really important. I think it's really important that any of the stuff we do, if you share as well, because this should not be kept from anybody. It's not within the ethos of what we're trying to do here. We're trying to help as many people as possible and get them to think about what they can do to make their future lives better, not just their current lives. We've also got incredible people on this retirement series, people like Mike Green, who's probably the smartest person I've ever met, and the ever popular and incredibly intelligent Danielle DiMartino-Booth. We bring our Real Vision experts to take you guys on this journey of understanding and development. And that's one of the magic things of Real Vision, is our Rolodex of who we have access to. We have better access to better people than CNBC and Bloomberg combined. Nobody comes close to the kind of content, the kind of depth, and the kind of value of what we do. So if you haven't checked it out, it's well worth doing. And as I said, please check out the $1 offer. It's listed below in the links. It just costs you $1. You get 3 months access, and you can decide and look through the thousands of videos in our back catalog, see the world's greatest investors from Stanley Druckenmiller to Mike Novogratz, all there teaching you how to be a better investor. So thank you for tuning in. Any questions? I'll try and man the question section below and answer some of the questions for you. And go to Real Vision and you'll get a ton more there. And there's a big commentary section where you guys can get involved in the community and ask questions, because there's a lot of smart people in the Real Vision membership who can help out and bounce ideas from. So I really hope you enjoyed this, and I hope you found it pretty valuable. Thanks so much.